Welcome back to another episode of the Bear Market Brief podcast. As usual, I'm your host, Aaron. So a lot of what we do here on the podcast is political risk. We're exploring the intersection of politics and economics, predominantly in Russia, but in some neighbors too. But we haven't really taken a step back to explore how one does political risk. What's the methodological approach? Well, joining me today is Nick Trickett. Nick and I go way back, but most importantly, he took over the Bear Market Brief as editor-in-chief after my tenure was up. We had a really great conversation where we talked about some of the methodology and then apply it to some ongoing situations, Nagorno-Karabakh, and how Russia's doing during and after COVID. We hope you enjoy. Nick, great to have you on the podcast.
Yeah, man, it's good to see you again. It's been a while.
So, to kick things off, before we even get to the issues, just quickly tell us who you are.
That's a very good question. So I used to work with you actually on Bear Market Brief. So I kind of had the energy beat for a while. I ran the Eurasia Roundup when it first started, eventually took over after you left it, and kind of had like a freelancing political risk background after my tours of duty as an intern in DC. Then went back to school at the London School of Economics and did a little bit of part-time work for AKE with Max Hess, actually doing kind of like short risk reports for trade insurance kind of clients, for example, as well as, just the writing stuff I've been doing in general. And after that, after I finished the program, I was a consultant until May because of the downturn at Wood Mackenzie, which is kind of one of the leading energy research consultancies. And they've like historically obviously focused on oil and gas, but now moving more towards renewables and other commodities.
So I'm really excited for this episode, A, because Nick, took over the brief after I did way back when, to talk through not just some of the more subject matter focused news updates, but also more political risk as a discipline. And that's interesting today because it's October 2nd while we're recording this, and overnight, Trump was tested positive for COVID-19. So without necessarily laying out the narrative and the details, I want to, Nick, talk with you about how do we go about making sense of the risk factors at play, and making sense of how this might impact the trajectory of the election, of policy. And what we're going to do next is then tie it to an issue much closer to Russia and kind of see how that framework works overall. So how do we go about breaking this down?
So that's a very good question. And I think one of the hard parts about doing political risk, working in it, is that a lot of it really is kind of like soft in the sense that everybody has their own idiosyncratic approach to it. And there isn't really a rule book. Obviously, companies have their own approaches. But I think the way that I tend to think about it is to basically break it down into different baskets where like you have the kind of macroeconomic side of it. So like the kind of initial highest level, to be Marxist, superstructure of the event's impacts. You have the kind of institutional impacts. So specific agencies or companies, or in this case, a political campaign. Then you have kind of stakeholders. So for example, people that might not necessarily be in that institution, but care about the outcomes of that institution. Or else care about the macroeconomic impacts. And then kind of finally, the hardest part, and I think the softest part of it, the part that's most uncertain, tends to be trying to project forward some sense of what effect the actual event you're talking about has, or like decision has. So that really doesn't actually have a proper definition per se, because obviously it depends entirely on the event we're talking about. But that's usually kind of thinking about like trends. So if it's a market issue, like market trends, if it's a political campaign, polling, the types of problems posed, in this case, to a campaign, for example, by somebody not being on the trail. How does that opponent actually take advantage of somebody being sick? Because obviously you don't want to be seen to be punching like a defenseless person on air. I mean, this election is not obviously a good example for that. But the point's more that I think that last factor is kind of where the alchemy happens and tends to be mostly up to the individual analyst and their own background and kind of preferences for how they analyze things.
The part where you lick your finger, put it in the air, and come up with a percentage chance of something happening, essentially.
Yeah, and I think also it's important to note, like, combining the different levels of analysis into how you're rendering that projected outcome.
So let's take a couple minutes here, kind of talk through on those levels what Trump testing positive, how this goes. Again, this is not a formal, well thought out. I'm posing this to Nick on the fly here, so this is more about the approach than the actual analysis here. So we have the economic level. I know stocks are down a little bit. Does this have a market impact, and how do we think about whether this will impact the market?
So normally to assess whether it impact the market, the real question you're asking is, does the market prefer Trump or Biden to win? That's the basic fundamental underlying question posed there, and we actually don't really know. It's kind of hard to tell because obviously Trump's tax cuts have been really, really good for stock returns, for equities and so on. At the same time, though, I think that you have seen more recently that the Wall Street's kind of turned against Trump, realizing that actually getting the virus under control is how people start buying stuff again and like having jobs again, and that obviously is going to lead to better profits. So I think like in this specific instance, it's just as likely to have a kind of net neutral impact as it would a negative impact that you'd normally see. Obviously, uncertainty is always negative when it comes to financial markets, but I don't think it's going to have like a huge negative impact.
Yeah, I think I would agree with that. As far as the stakeholders involved, now we can take this into foreign policy, at which point there are a lot more stakeholders. So maybe we should keep it domestic because our next exercise will be very foreign policy focused. But what other stakeholders kind of are in this universe of people affected as far as understanding the trajectory here?
Yeah, so I mean, a couple different things to look at there. One is the donor base of the parties in question. So like obviously for someone like Trump, he's really been heavily reliant on dark money, or people like Sheldon Anderson in Las Vegas, kind of funneling lots of cash into ads that aren't necessarily directly affiliated with his campaign, but clearly are political ads. They're likely to panic, obviously, because they want this guy to win. So I would actually expect to see like a surge of spending from big Republican donors trying to kind of cover ground in key states and to basically make up for him not being publicly campaigning as much, right? Because obviously he's going to be in recovery and so on. So that's one example, right? I mean, in terms of other stakeholders, I mean, you have the agencies responding. So like Pompeo, it's just ostensibly foreign policy, but it still works, I think, for the example. Pompeo like is considering canceling going to Asia because he's worried about succession and just what's going on in DC and keeping an eye on it. He's also worried about his own campaign prospects for the future, but that's a different question. Or like Pence has to plan and might internally have to basically start having conversations about what happens in the worst case. You have Mitch McConnell and the Republican majority in the Senate trying to figure out what him getting sick does for negotiations over stimulus. Ostensibly, I would assume they're trying to delay stimulus so that it happens just before the election, so people like them and credit them for helping out. But like maybe not. Whereas Democratic leaders obviously now knowing Trump's sick are in a really tough bind because they're not going to have as much leverage over McConnell. So I think it's the way to kind of boil down the stakeholder side of it is to really just think of really who wins, who benefits, to use the kind of basest, most crass formula, and who has a stake in him being president.
Makes sense. And then I guess one other level that is important, especially important in Eurasia, we're both two very political people trying to not sound at all political, but kind of the optics of this, where Trump, I think it's safe to say in a nonpartisan sounding way, has played down the threat of COVID. Does the whiplash of him now going and catching it in the most 2020 event possible, does that impact him negatively? It seems like a lot of the stakeholders, the institutional factors here are almost completely baked in and baked to completion, where there's really not a lot that could actually make a big change. I think that's a fair assumption, and I think that it's also important to remember that take figures like Mitch McConnell or Steve Mnuchin at the Treasury. They represent themselves. They don't represent Trump. So like they obviously collaborate with him and work with him on a lot of issues, but the reality at the end of the day is they also have their own agendas. And so like I also think that their own agendas are somewhat independent of whether or not he's actually even the nominee. So I think most of the institutional factors are baked in. Where it gets harder to predict is when decisions have to be made requiring executive order or like negotiation with the White House in some capacity, because obviously like Trump could also like veto a bill he doesn't like, things like that. I don't think that the Senate's
being particularly active right now, so I'm not that worried about that outcome. But I do think that it's important to at least remember that, like, even if institutional factors are somewhat stable, there's still always an element of disorder and kind of chance when it comes to individuals operating within institutions, especially ones like Trump, who don't really care about norms as much and have a huge amount of potential sway over outcomes.
Yeah, I think one of the things in my approach that I always make a point of following is kind of borrowing from like Bayesian statistics, like the priors. Like, what has the trajectory been before? It's not just events happening randomly. Oh, like there's a 60% chance this totally new angle happen. If that's not related to what has been happening before, I think these one-off events kind of they don't have a context. It's important to understand what the actors were doing before, which is, if you ask me, what a perfect segue to talk about something a little closer to Russia, with events in Nagorno-Karabakh, where there was a very low-level conflict, well, a war in the 90s between Armenia and Azerbaijan that was frozen, and in the last couple of years has begun to, unfortunately, thaw, and over the summer started to slowly bubble and escalate to the point where it's now no longer, taking, pot shots and launching mortars at each other. I would say it's safe to say we're in like full-scale interstate war or something near to it. I know yesterday there were rumors that a drone from Azerbaijan was around Yerevan, which is not near Nagorno-Karabakh. So using this as an exercise, very sensitive topic, so not taking a side here by any stretch of the imagination, but kind of doing the same exercise as we did with Trump and COVID here. There's a lot of global powers at play here. So how do we break down, A, what's happening, who are the stakeholders, and how it might evolve?
Right. So to take the first level, which is the macroeconomic level, is there going to be a kind of market moving impact, or are people who just are trying to make money worried about this event? There's really no evidence that that like what's happened is really impacting the oil market specifically. Obviously, Azerbaijan's a big oil exporter, so one of the first things you would just do is just check, is the market reacting to the fact that a conflict is erupting relatively near pipelines for oil and gas? The answer is no. So we can scratch that off. We don't have any empirical evidence for that claim. In terms of the stakeholders, you really have to kind of look at how both countries, Armenia and Azerbaijan in this case, have shaped their security paradigms and strategies. So like in the case of Armenia, obviously, because of the outcome of the conflict and because that territory is still recognized as Azerbaijani territory internationally, in legal terms at least, Armenia has always been isolated, right? Like Turkey effectively isolated its border. Its relationship with Georgia is not such that it can rely on Georgia as an outlet to grow economically. And clearly Azerbaijan's not going to want to trade with Armenia. And just if you try to cross the borders between the two countries to this day, having visited one or the other, they'll see the stamp and ask questions. So that's obviously not an economic option. Iran is a potential partner with Armenia, but then you run into the problem that the Iranian territory that actually abuts Armenia is heavily Azeri ethnically, and also the economies aren't very complementary. So it's really, Russia's actually really Armenia's lifeline, and by far the most important security partner, in part because they have a formal defense agreement. Now, in Azerbaijan's case, it gets a little bit more complicated because Azerbaijan benefited from its oil wealth in such a way that it had more flexibility, and also, frankly, has a somewhat tumultuous relationship both with Russia and Iran for different reasons. And so, for example, Azerbaijan's a big partner for NATO transit to Afghanistan for supplies, so that they've leveraged that very heavily. They buy a lot of military equipment from Israel because they historically have signed supply deals for oil with Israel. We can't know that because Israel basically classifies its oil imports. So we only find out a quarter century later, but it's relatively well known that's a thing. And also Turkey clearly has an affinity with Azerbaijan because of both being Turkic peoples and Turkic languages that are relatively similar. They mean very close to each other and so on. So start there, right? So Armenia basically has Russia at its corner, and then if you look at more recent communiques, France and the U.S. agreeing to jointly communicate that they want things to de-escalate. In the case of Azerbaijan, the big change is that Turkey has almost never taken an explicit side in the conflict. It's always kind of leveraged it for political influence, but not really pick sides. And this time, as part of a broader change in Turkish foreign policy behavior the last couple of years, it decided to aggressively tilt towards Azerbaijan. And so essentially, you have a conflict that's not just, I mean, I think it's still being driven by Armenia and Azerbaijan. So I think people are exaggerating a little bit too much the great power element of it, because that's a sexy headline. But you have a situation where Russia and Turkey are ostensibly aligned against each other in the same way that they are arguably in Syria, and in a different manner in the Eastern Mediterranean, because Turkey obviously has been a bit crazy there lately. So you have this kind of interlocking web of relationships with people with different competing interests that are all built out of the security relationships that both countries have. So I would start there, I guess, if you want to pick it up.
Yeah. So we have this, this kind of, again, it's not necessarily, I think their local factors really explain it most of all. Everyone's like, oh, like it's the United States, it's Russia, it's Turkey. They're just, pulling the strings. I think the fact there's a simmering conflict, and, as that starts to bubble, local leaders lose credibility if they can't be strong. I think that's the most parsimonious possible explanation, that it's, a strong stance needed to be taken politically, and that led to the unfortunate situation we're in. So now kind of stepping back to how this may impact these bigger powers in the neighborhood, it doesn't seem like either Russia or Turkey has too much of an interest in things really bubbling over, not least because Russia literally has forces stationed in Armenia, and has a mutual defense pact with Armenia that, interestingly, hasn't been invoked yet, as last I read. So I guess let's talk about whose benefit and what do the parties want here. Let's kind of go by country. What does Armenia want? What does Azerbaijan want? What does Russia want? What does Turkey want? Or what might they want?
Well, so Armenia, it's shifting a little bit, because Pashinyan, he basically signaled that they would consider, if I recall correctly from the last couple of days, effectively acknowledging independence of Nagorno-Karabakh, officially, which would obviously be a legal change of status and significant development. In practical terms, Armenia wants Nagorno-Karabakh to, over time, become part of Armenia if it could. Though obviously, I think it's a bit more complicated when you look at stuff on the ground. And it's also just a matter of national pride, right? There's a very, very, very clear existential threat posed by losing it. Now, at least at this point in time. Now, I think for Azerbaijan, it's a little bit more murky. I mean, there's the same problem in terms of they want their land back, right? So that's an obvious driver. I think in the case of Azerbaijan, going back to what we were saying earlier about what was happening before the event, to contextualize it, I would argue that ever since oil prices crashed in 2014, it's been a bit of a time bomb, because it's a very salient issue for the regime. And obviously, as you said, having a strong stance really matters domestically. And the reality is that if the country is no longer growing economically because oil prices aren't high enough to sustain growth, then eventually the regimes have to find other means of manufacturing legitimate. So in this case, it would make sense to try to pursue more aggressively, a military victory of some kind for the public, at a time when, in theory, the rest of the world's not really paying attention, and Russia is also a bit distracted with Belarus. I mean, Russia just wants the status quo. Part of the reason why Armenia hasn't invoked the defense pact is because technically Nagorno-Karabakh is not Armenia, so obviously that complicates their ability to do so. But I mean, in general, Russia just wants peace and stability of some kind, right? It doesn't really have a favorite, I mean, it leans towards Armenia because of their relationship economically and so on, and in the defense terms. But I think in practical terms, that relationship is also a function of just wanting to maintain stability and the status quo in the region. And I think in Turkey's case, as far as I can tell, it's a bit more like them playing chicken again, like they did in Syria, because Turkey's a NATO member, so obviously they're willing to bluff against Russia, because if Russia attacks Turkey, they've attacked the NATO member. So then you obviously have the risk of an Article 5 invocation, and the United States gets involved, as do other European powers. So I think Turkey's aim in this specific case is not actually about the conflict itself. It's more that it's a useful bargaining chip for a widening array of political standoffs in the region at a time when its economy is really weak. And I mean, I don't know enough about Turkey to meaningfully speak to the rally around the flag effect, but I think it's pretty obvious that when things are unstable domestically, leaders that have relatively firm grip over governments have an incentive to try to do something to generate a win. I don't think it's always a war. Obviously, I think Crimea, for example, is the example given now because of what Putin did with his approval rating is a bit of a it's a bit of like an outlier. I don't think it actually reflects properly what a lot of these cases would look like. But it clearly gets Ankara negotiating leverage with Moscow at a time when it really doesn't have that much to negotiate with if it suddenly has a stake in the conflict.
Yeah. So, I mean, in that regard, what Turkey is doing, similar, dare I say, almost a little reminiscent of kind of Putin's kind of signature move, just kind of creating a status quo on the ground, kind of getting involved, not necessarily in a major way. I think there's certainly been talk of, Turkey, Armenia accused Turkey of shooting down an airplane, which we haven't really seen evidence of that yet. But, making itself an indispensable part of the equation and then getting leverage from it. Same as Russia did in Syria. I think there's an argument to be made. So now that we're firmly in the Eurasian neighborhood, want to talk about, we've talked on this podcast a lot about how is Russia doing? How's it managing with COVID? As last I saw, I know Russia, much like the rest of Europe, I just called Russia Europe. Much like a lot of European countries, got the situation fairly under control, has a vaccine. I'm making air quotes now. So speaking of COVID, starting to tick back up, where is Russia at now economically? How stable are we talking very quickly? And then more importantly, what's Russia's trajectory economically as COVID, inshallah, lifts and is no longer a factor?
Yeah, so I think so the first point is usually about stability because obviously, there's a large body of literature and evidence that the kind of Russian economic model of the last 2 decades that's evolved privileges stability over growth. The situation is stable; it's just really bad. So, the way that I'd frame it is that there's not like a massive worsening of economic conditions, largely because of external demand for commodities, kind of lifted prices. Largely, Chinese stimulus did that. There's some U.S. stimulus helped with that too. Not oil, but metals and minerals, things like that. Gold going up also helped. So in general, they managed to weather the worst of it. Ironically, because the economy is less dependent on services and largely driven in terms of its in terms of like income growth and so on for the country by exports of commodities. Now, I think in practical terms, it's terrible. The unemployment's much higher than official stats are showing. I think everybody basically accepts that reality. That's also probably true in a lot of Western countries, actually, because it's difficult to know if people have been furloughed if they'll have jobs once those kind of support schemes end. I think that the bigger problem that is emerging now is really about something as simple as that even the current account for the country, like the structure of trade. So a lot of the what managed to kind of get Russia through last time was the fact that the G20's coordination in response to the financial crisis in 2008, 2009 essentially saved the oil price. Now, obviously, it was a different shock because there was no virus, so it was really a financial crisis firmly, even though it impacted the real economy. But basically, the stimulus plans that were put forward, bailing out banks and so on, managed to get oil back up to $100 a barrel. And so, even though it didn't produce growth for Russia, it meant that the budget was okay. And then now the problem, obviously, 2014, 2015, you have the oil price shocks, and then you go into a long period of fiscal consolidation, which is a fancy way of saying that they're just trying to cut spending so that people get less from the government. And so the problem,
optimization they use.
Yeah, I think now it sounds very like Brezhnevian, like bizarre, like computers are going to perfect it or something. But the basic problem now is that you've had effectively 6 years of slow-moving austerity imposed on the country, and then the shock hits. And the real economic crisis response, even though it's been fairly good over things like creating a moratorium for bankruptcies, offering some income support, even though it's really not that significant when you look at the scale of it, they've managed to avoid the worst damage. And but the problem now is that they're still stuck in the mindset of not wanting to spend, and they have like nearly $600 billion worth of currency reserves now to spend, and they're just not. They have to save some of that because it covers external debts, debts owed in foreign currencies. But even just this last week, the directive sent out to essentially instructing state-owned companies, namely Rosneft, Gazprom, and Alrosa, to use their foreign currency earnings to prop up the banking sector, because the banking sector is suffering like a liquidity crisis for foreign currency. So like it's an interesting time because a lot of the Russian model really does rely on the idea that oil demand is going to keep going in terms of growth, and that's just no longer clearly the case. I mean, I think I'm definitely much more bearish about the future of oil demand than a lot of people in the industry at this point. But I also think about it in terms of political economy as opposed to how like an economist might model it. But the basic problem is that I just don't see a viable path for oil to really rise above $55 a barrel for a long period of time ever again. Even with how unprofitable U.S. shale has been, most of the current drillers say that they will get back into action if it hits that kind of price mark, as long as they can stay solvent. And obviously, borrowing is cheap right now. A lot of them will be okay for at least the short to medium term, but not. I mean, a lot will go bankrupt too. But you have that going on, and then on top of that, you have the basic problem that the real technologies that they need to kind of pivot the economy towards where things are going. So I mean, there's going to be like a revolution in energy efficiency via research and development spending from a lot of companies and countries. There's going to be a lot more investment into renewable energy and trying to essentially restructure the way we factor in growth estimates out of businesses and structure businesses. Russia has like a massive lag there. And its own system of subsidies for energy, for example, hinders its actual ability to move towards what that looks like, and hinders its ability to build up its own manufacturing base to provide those products and export them. And so I think really the basic problem now is that like the model that's existed really benefited from oil and gas specifically because they're very taxable. But if the main resources of the future that are going to be the kind of contested ones are things like cobalt, lithium, nickel, copper, et cetera, like you can make money in foreign currency earnings, exporting them, but you can't make as much money taxing them. And so I think the post-COVID conundrum for Russia is really that like we are finally reaching a secular change in terms of the way people conceive of energy, and they're way behind the curve on meeting it. So their budget and their macroeconomic philosophy that's kind of accompanied it is going to have to evolve, and there's just no evidence that it's evolving right now.
So to make a comparison here, this kind of analogize that, fair to say Germany is to fear of debt as Russia is to fear of instability, almost to the point of constricting kind of their policy room for maneuver?
Yes, though I would actually argue that Russia's more Austrian than Germany is when it comes to debt. Like there's understandably so, going back to see the Soviet period and the experience of the late 80s under Gorbachev, Russian leaders and the ones who who grew up in the Soviet Union who are now in power, the ones who also came just after in the 90s, like they always prioritized paying off their external debts over their domestic debts because those are the ones that mattered most to keep the money coming in via commodity exports. Or in the case of the Soviet Union for grain, in the case of Russia, it was the fact that they had a fixed exchange rate until 98, and between 94 and 98, sorry. And so like that they had to maintain that. Now, obviously, the 98 domestic default in Russia creates a kind of sea change where everybody panics about fiscal stability and like not owing people too much. So like the entirety of the last 20 years has been just reducing external debt as much as possible and always having cash in hand. So an obsession with running fiscal surpluses. The problem, of course, being that the way that they run the surpluses ends up impoverishing the actual private sector, the average person, because they end up having to take out more debt and so on to sustain spending as opposed to getting help from the government or else growth generated by public investment. So the irony is actually that the first two terms that Putin had in his system, he overperformed in some respects because oil really saved them. Now, it wasn't really the plan because if you actually look at the way that they wrote the tax code in 2001 for oil, they didn't expect prices to rise the way they did, and they actually blew past the parameters of the initial tax code. So they actually like, I would argue, accidentally got as addicted as they are. But the thing is that the combination of stability has always come alongside this idea that you don't owe foreigners money and you always have a surplus of cash around. And if you look at how economic orthodoxy has evolved in developed economies in the last 15 years, especially post-crisis, most developed economies are now comfortable running effectively real negative interest rates, for example, on their debt, on massive expansions of the money supply because it doesn't actually impact inflation. So the question then becomes, why is inflation so different in Russia than it seems to be in the West? Because they've been very conservative, in terms of things like money supply expansion. And the best I can answer to that question is that inflation in Russia tends to happen from things like, just basic imbalances of supply and demand, whether that be from infrastructure, so just not having good roads and rails and airports, having an underdeveloped domestic manufacturing sector for consumer goods, things like that. And those are all things that can only be fixed at this point, given how big the state's role is in the economy, either by some like radical new wave of shock therapy, which is not going to happen and would be disastrous for a lot of people, or else by like a new kind of government spending paradigm where they try to actually build new businesses to make new kinds of money, like in a way that they hadn't before.
So essentially the issue, paraphrasing here, is that Russia now, as far as the role of the state in the economy, it's either too statist or not statist enough.
Yes, because the thing is that the only way out of the hole they're in, I would argue, is a state-led development program. And they have one in theory, but in practice it's a joke, because it really ultimately is more about lobbying interest groups, and it's gotten wrapped up in geopolitical considerations as opposed to actually being about like a sustainable approach to, let's say, capturing an intermediate stage of a supply chain and specializing it the way that like South Korea did, for example. Now I think they have a chance to do that with some Chinese companies, for example, now, because they, like the West is probably not going to be investing anytime soon. But Chinese companies still have to believe that their investments are safe in Russia, and obviously, as we both know, the business environment is not exactly pristine. So there really is, I think, like a fundamental crisis of growth in a way that even if it existed post 2013, because the old growth model exhausts itself, as you've written about and talked about before, and others have as well. I think it's actually the next level now. It's a new stage of stagnation. We're beyond the kind of stagnation of the last 7 years, and post COVID, it's going to look even worse. So,
well, that's kind of the paradigm about Russian history. He said very cynically that it got worse.
Yeah.
On that positive note, we actually have one more item before we wrap up for today. But you just launched a new daily news brief called OGs and OFZs. Give us a quick elevator pitch about the brief, what you're hoping to do with it, and where people can sign up.
Yeah, so basically, what I noticed was that no one is really talking about the arc of Russian foreign policy or business and politics really as a result of the energy transition. And post-COVID, I mean, not in like an academic setting, but like in a daily kind of more granular setting, in a kind of business political risk-facing setting. So I wanted to start stories that somewhat deal with the kind of COVID crisis and then energy transition, and then offer kind of daily analysis on what different aspects of the energy transition and kind of what post-COVID recovery globally looks like, how they impact Russia. So like not just talking about Russia in a bubble, but trying to also situate it within like macroeconomic developments, within like trade imbalances, within, like things like that, to offer, I think, scope that is unfortunately lacking, because frankly, when a lot of Russia specialists understandably really are in the weeds on just Russia itself and don't really step back as much to try to, contextualize it.
Very cool. Well, I'm a subscriber. You listeners should be too. We look forward to future editions. Nick, thank you for joining us. This was a great and very illuminating conversation. It's been a pleasure having you.
Thanks, man. Thanks for having me. Really appreciate it.
Thank you as always for joining, and be sure to follow BMB Russia and Ukraine at the Twitter handle @BearMarketBrief. Stay on the lookout for future episodes. We'll see you next time.